Are USDA loans used more often? And honestly, the best way I can think about it is a USDA loan is very similar to if you had a computer and you have no internet. They're a program that's available to literally anybody, but unless you have the means to use it, it's somewhat rendered useless for you. So today we're actually going to go through why USDA loans are not more commonly used, why especially in these suburban areas you don't see them, you don't hear people talking about them, as well as what some of the benefits and the downsides are to using these USDA loans. Because honestly, I feel like these are massively underused. Now, there is a reason for that, which we're going to go through with some of the benefits and drawbacks, but this could be an incredible option if you're willing to be in a rural area and you want to buy your first home. So hey guys, I'm Jake from Home Loans. Today we're going to be talking about USDA loans, both the benefits and the drawbacks. I'm going to make this as quick as I can, but this is good stuff for you to know if you're looking at buying your first home and you're willing to be a little bit outside of your suburban area. So first off, let's talk about the benefits. Obviously, one of the number one benefits of a USDA loan is it's a 0% down loan. So similar to VA or using down payment assistance, it's actually nothing as a down payment. You can finance the entire thing. So what's really cool about this is for rural areas, using this 0% down, as long as you qualify in the realm of where you need to be, you can literally move in for almost nothing out of pocket. Now, for example, I just had a client close last week with a USDA loan. They were able to get the entirety of the closing costs covered by the sellers. This was really cool because they were literally able to move in $0 out of pocket. They got their entire earnest money deposit back. They got everything back. And these are first-time buyers that were planning on living in a more suburban area and using down payment assistance. So beyond the 0% down option, USDA actually has super competitive interest rates. So being a government loan, the interest rates are pretty good. It is government backed, which is really cool. But in general, when we were pricing out between FHA and USDA, they were very similar and USDA was almost always a little bit better. Third, it's a bit more relaxed on credit requirements. I don't know about everybody else, but us as a lender actually allows you to go down to a 580 credit score and still qualify for USDA. So if you have a little bit lower of a credit, this can actually still help you qualify depending on what that credit looks like. Fourth benefit is there is no PMI on loans, which, as you know, if you're using an FHA loan, you have PMI the entire length of the loan. It doesn't matter how much you own. And with a conventional loan, you have to have PMI up until you own around 20%. Now, what's cool, USDA, even with those low credit scores, there's no PMI. So you're not being penalized monthly for having a low down payment. And lastly, with USDA loans, there's something what's called the IRRL or the Streamline Refinance. It's the same with FHA and VA, but basically this refinance allows you to refinance the entire USDA loan for almost no documentation, which is really cool. So if you qualified for it for the first time, there's a good chance you're going to be able to just streamline straight through it, which means you can reduce your rate and your term for little to no hassle, because they're able to just streamline, refinance, get everything done. Now, on the backside of this is the drawbacks of the USDA loan. Now, to be clear, these are the reasons you don't see nearly as many of them, is because they are hard to qualify for. Out of those drawbacks, you have quite a few. The first one is going to be geographic restrictions. Now, as I mentioned, these are only for rural loans. So I'm in Sacramento, I'm over in Roseville. You're not able to use a USDA loan in Roseville. And actually, I'm going to be linking the map down below for USDA so you can actually go click it and see what's eligible as a USDA property and where the map goes. So you can actually even use USDA some of the other places similar to like Pollock Pines and things like that, depending on where you buy, because the restrictions are dependent on the neighborhoods and things like that. So go check that out if you're interested. Now, second thing is the debt to income ratio. Now, obviously with FHA, VA, and conventional loans, your debt to income ratio is around 50 to 55% as the absolute maximum. If you go over that, it's a no-go. The downside with USDA is your max debt to income ratio is around 32%. So technically it's supposed to be around 32. If you're over 32, you do have to get an exception. And usually even underwriters can't make manually underwritten exceptions on these loans. If you don't have their automated underwriting system give you an exception, you cannot do the loan. So with such a low debt to income ratio, this really limits the amount of house you can get. So what we're actually going to do is look up the US income limits, and with the income limits looking up, what we're going to do, we're going to say right here, so we're in Sacramento, so we're just going to use that. So based out of Sacramento, California, the county, the moderate income is $123,250. Now, this income limit does change depending how many people you have in the family. That can go up or down, but basically there are income limits. So if you're looking at this, if you make more than the minimum, then you cannot qualify for a USDA loan. Now, with that being said, with those income limits, let's say the income limit was 90,000 for the area you're looking at. If you make more than that 90,000, you don't qualify for this, but under that 90,000, now that 90,000 is only going to get you so much of a house. So depending on where your income actually lies with that debt to income ratio, there's only so much of a house you can actually purchase for the price with the USDA loans. And a lot of times that's going to be one of the lower end prices of the house. So really, in order to get this to work for you, you need to be in a rural area with homes that are priced in a pretty decent capacity. Now, and from my experience, that's one of the biggest reasons that you don't see a ton of people doing USDA loans, because they are more rural and because of that max income limit. Even if you qualify under the income, depending on where you're trying to buy at, there may not be homes for sale in the price range you need. Now, the next drawback is actually that these can only be primary residence. So the other reason you don't see a ton of these, you have to live there and it has to be your main. You can't live somewhere else and then go visit that as your second home. This has to be your main primary residence, which is usually described as you have to live there 6 months and 1 day of every year. Can't be any less than that. Now, with that being said, of a primary residence, you also can't have co-signers because they're not living in the house with you unless they're living with you. And then that would make them actually co-applicants. So you can't have your parents or your brother co-sign with you unless they're going to live in that house with you in order to purchase a USDA. And lastly, because this all has to go through the state, it's going to be slightly longer on the underwriting times. There are different requirements that they have. So the underwriting is a little bit more strict with these USDA loans. So basically, these USDA loans have some incredible benefits, but there's also quite a few drawbacks, which is the reason you don't see more of them and you don't have friends out buying with USDA loans all the time. Now, again, there is 0% down, so you can literally move in for almost nothing out of pocket. They have good credit requirements, but they are hard to qualify for because of the income limits and the max debt to income ratio, as well as they have to be your primary residence. So if you're looking to buy a home a little bit further out, you want to be a bit away from the city, see if you qualify, because this could be a great no down payment option for you. Especially a lot of these places, you're able to get those seller's credits to help you actually pay for the closing costs. So keep this in mind when you start looking for a home, because it could be worth it to at least see if you qualify. Now, the qualification process for these USDA loans is the same as every other loan. You do an application and your lender is supposed to help you with figuring out which programs you qualify for. Now, keep in mind, not all lenders will do USDA because they are a little bit harder for them to do. So if you have questions on USDA, reach out. And if you haven't yet, subscribe, like if you feel like you learned something, and please shoot down questions in the comments below. I'm happy to answer everything I possibly can. I'll see you next time.